I've been playing around with some metrics recently, and rather than focusing on pinpointing where the bear market bottom or the bull market top lies, I've been trying to gauge whether a bull market truly has momentum based on raw price data alone. And sure enough, I've developed a metric that performs exceptionally well when following a few simple rules. And, more importantly, it outperforms buying and holding Bitcoin without trying to time tops and bottoms to perfection. So let's dive into it. I've called this metric the bull momentum gauge. An unoriginal name, I know, but it does exactly what it says on the tin. Before I dive into the strategy and how well it's performed, let's quickly review what it's actually telling us. Essentially, it measures how far the inverted z-score of Bitcoin's price deviation from its 1 year moving average is from its own 200-day moving average. Now, that sounds complicated, but it's really not. Essentially, it measures how stretched or squeezed Bitcoin's price is compared to its usual long-term pattern. In other words, it highlights extremes in sentiment and valuation by quantifying how far the market is deviating from its long-term behavior. More importantly, it gives us strong signals for when the market is likely to rally further or when it's losing steam. On the chart, I've made a simple representation. Green means good to go, and red means leave it alone. Let's go through the rules, and they're very simple. Whenever the indicator is green, we buy and hold, and we keep holding until it turns red again, no matter what the price is doing. Conversely, whenever it turns red, we exit our position and sit on our hands until it turns green again, regardless of price action. Because the indicator relies on looking back at previous data to present the current signal, we're starting at May 2016, just before the massive bull run that culminated in late 2017. Now, that would have been a fantastic time to lump sum a load of Bitcoin and hold it until today. To put this into perspective, if you had bought Bitcoin in May 2016 at roughly $440 a coin and invested your entire life savings of $10,000, you could have bought about 22.7 Bitcoin. By holding those coins today, you'd have done exceptionally well. At a rough Bitcoin price of $100,000, your holding would be worth approximately $2.27 million, which is a 226 times return on investment. That's pretty staggering, but let's see what returns we could have achieved if we followed our simple strategy. Starting at the same $440 price point, we'd invest our full $10,000. It didn't take long to hit our first red signal on the momentum gauge, where we would have sold out at $570, leaving us with just over $12,900. We'd then buy back in when the indicator turned green at $680. Now this is where we'd start riding the wave. You'll notice we briefly dip back into the red here, so, following the strategy, we'd sell but then buy back in again at roughly the same price. Despite that, we continue riding the green wave until the indicator turns red just after the 2018 market peak. While we don't sell at the absolute peak, we do exit at around $14,700, growing our pot to a hefty $281,000. We then patiently wait as the market cools into an extended bear phase and stays red for a long time without deploying any of our capital. Eventually, we see momentum return again in February 2019 and buy back in just below $3,800. We then ride the unusual price action of 2019 until we sell at $8,500, just before the momentum breaks down again. By this point, our pot has grown to over $632,000. We sit through another extended red period of over a year, sticking to our strategy and even ignoring the crash in March 2020. Remember, this strategy isn't about picking the perfect bottom or the perfect top. It's about riding momentum. In July 2020, we buy back in at $9,200 and ride the bull market to its peak, before the indicator turns red at around $57,000. At this stage, our net worth sits at just under $4 million. We then sit out again for over a year as the market cools off and turns into another extended bear market. We eventually get our first green signal again in October 2022, buying back in at $19,000, not the absolute bottom, but close again. We then ride this rally through to June 2024, selling at $64,000 as the momentum breaks down once again. By then, our pot has swelled to over $13 million. The market chops sideways, and we enter red once more. Then we buy back in one last time in November 2024 at $69,000 just as the rally begins again. We quickly exit in February of this year at $95,000. Now we've just entered another green zone, so I'll stop the analysis here. But the final result is pretty impressive. It stands at $18.3 million. We turned an initial 22.7 Bitcoin into 191 Bitcoin. That's a 1,800 multiple on the original $10,000 investment. Now this assumes we reinvested all of our capital at each signal, with no fees or slippage along the way, but it's perfectly doable. So we didn't just outperform buy and hold Bitcoin by a little. This strategy outperformed it by over 8 times. It just goes to show that even small dynamic adjustments can lead to significant outperformance when tested over a long enough time period. We can even enhance this strategy by doubling down on bullish momentum retests. If you started adding, say, $1,000 on these dips and rode them to the point where the indicator turns red, the returns get insane. But let's leave it there. Now, I'm not suggesting anyone rushes to copy this. After all, it's a very simple way of looking at the market. It doesn't take macro or on-chain data into account, which some might actually see as a positive. It takes all the thinking out of decision-making, and more often than not, we're our own worst enemies. But, for most people, a buy and hold strategy or simple dollar cost averaging with each paycheck is one of the most powerful things you can do. As we saw, a simple $10,000 buy and hold investment yielded over $2 million in just 9 years. Not bad at all. But for those of you with the time, inclination, and interest to study the Bitcoin market, there's a wealth of data that can tell you a lot. It's not just simple z-scores and price deviations. There are many metrics out there that provide rich insights. The Bitcoin blockchain itself offers incredibly powerful on-chain data, showing exactly what the market is doing right now. It doesn't predict the future, but it does give a very solid framework for understanding current market behavior and how it relates to history and investor psychology. And if you're interested, I urge you to explore the data and metrics available online, and not just mine. It's not only about outperforming buy and hold investing. It's about learning how markets work and how we as individuals operate, hopefully making you a better investor overall. If you're serious about Bitcoin analysis, my full custom indicator suite is now live, built for investors looking to gain an edge through deep cycle signals and advanced on-chain insights. It's available now through the link in the description, where you'll also find my free newsletter. And if you found this valuable, hit the like button, subscribe to the channel, and turn on notifications so you never miss an update. And I'll see you all in the next one.